the safe haven status of the dollar. Before we even get to the idea of it being questioned, which I'm unsure about, can you describe the safe haven status of the U.S. dollar and what it represents and how it compares to other currencies?
Sure, it is the world's reserve currency, and that means simply that when we have a trade deficit with a country, they have to do something with the dollars we send them. We buy trinkets from China. We pay for those trinkets with dollars. They recycle those dollars into treasuries or into U.S. factories or into U.S. stocks, but mostly treasuries. That makes the dollar, because of our role in the post-war financial order where we became the world's reference currency. You didn't have to hold gold in your central bank reserves after 1971 anyway. You could hold dollars. So we're the world's reserve, and before that you could hold dollars which were backed by gold. Dollars were as good as gold because of the gold-plated, to continue with to use a metaphor, a relevant metaphor, hopefully, reputation of the U.S. government. So as a result of the post-war trade and capital restriction, at first anyway, regime, the dollar became the world's reserve currency. It remains the world's reserve currency. It's what central banks hold. And that, some would argue, is kept its value high. If countries have to hold them, that pushes up the relative value. Yep. This gets a little arcane, and it's not my area. As you can tell, I'm fumbling a little bit. But some would argue that keeps the value of the dollar artificially, if you like, high.
Expensive.
Yeah, and that makes it hard for our exporters to compete, and also makes us a relatively attractive investment venue, so it exacerbates trade deficit problems. Though, as I tried to point out in the last hour, the trade deficit is mainly a result of, and this is not intuitive, so I don't be frustrated if you don't get it at first. God knows I didn't. The trade deficit is a result of us not saving enough, not just you and me, Mike, and everybody who's joined us today, but the government too. All these things are interconnected. Yep. All these things result in the dollar being relatively strong. And when we mean strong, we mean it takes a large number of a foreign currency to buy one unit of it, $1.
So there's some things that we can debate. Others that we can't. The dollar has weakened recently against baskets of other currencies. So
it takes fewer UK pounds or euros to buy a dollar. Yeah, that's what that means.
Put simply,
I'm just trying to explain it. Also,
put simply, back in January, a dollar would buy you 98 cents in euros, basically at par. Today, it's 88 cents.
Right.
So you've
seen a drop.
More dollars to buy €1 is the answer there.
Right.
The question that I have, and the New York Times has this piece here today, is this depreciation that we are seeing a questioning of the safe haven status, a questioning of the norm of, hey, the dollar is the place that we flee to when times are tough. We buy treasuries when things are in turmoil. We need dollars to conduct trade. Is it a questioning of that safe haven status? Or is it just anti-American backlash on the result of trades? And does that, or am I asking the wrong question? Does it even matter which one it is?
I think it's the right question. I don't know that we have or need to come up with a single answer. It's probably a little from column A, B, and a couple of other columns we didn't think of. If people are buying fewer U.S. assets, stocks, factories, treasuries, bank accounts. I mean, these are all, they're financial assets,
sure,
but it's a little bit broader than that. I'll just call it assets generally. If the demand for those goes down, so does the demand for dollars. So in a sense, if we keep sullying our international reputation with trade wars, and I know there's a political case for it, I'm not qualified to comment on that, but we have without question, we're smaller today on the international
trade
stage than we were 2 months ago. We are riskier in a sense. So if foreign central banks and foreign investors generally want to hedge against that risk, they would be diversifying out of dollars. Now, that makes U.S. assets relatively less attractive and pushes up our interest. All these things interact, as you've probably sensed. It sounds all fragmented and probably not coherent the first time you hear it, but all these things are interconnected. Bottom line is this will push up U.S. interest rates, and as it has over the past few weeks.
And that's what I wanted to focus on and conclude with that, which is, there can be some benefits to a cheaper dollar. Our manufactured goods, if you're a manufacturer doing business, family member of mine has a manufacturing business in Massachusetts that sells really complex products to like bottle manufacturers. Great. Good for him because dollar is cheaper. The downside to that, if there are fewer buyers of American debt, what you see happen is precisely what everyone saw happen on Wednesday of last week, and what is precisely what caused the Trump administration to pivot, which is interest rates going through the roof. It might be a gradual process. I don't think we're going to see what we did on Wednesday of last week on multiple days with basis points in the 20,
Right.
30 basis points move upwards. But that long, steady slog, if foreign buyers of U.S. debt start to disappear, means that the U.S. cannot finance its 6% deficits at a cheap interest rate. It means that it would be tougher for that to happen, meaning government spending might need to come in, taxes might need to go up. A number of things could need to change out of necessity to make that whole situation work. You're nodding your head that you agree with me, but I feel like it's because you sense we're out of time. We're not out of time.
I wanted to make a
Continue
point
on.
about the engineered, the coordinated devaluation of the dollar in the mid-1980s. Dollar got really expensive in the early 1980s. We were running big budget deficits. We were growing strongly. That made us a relatively attractive investment venue. Dollar got very expensive. Some people will remember the Plaza Accord, which Donald Trump now owns that hotel. I think he still owns it. So there's, history.
Yep.
History makes these kind of quirky connections. It was agreed among our major trading partners that a lower value dollar relative to their currencies would be a good thing. And so I wanted to draw a connection between that and the rise in real interest rates, which happened in the late 1980s. The timing doesn't quite work. It's off by about a year, but it may nevertheless be an example of, in that case, it was every president says they want a strong, every Treasury Secretary president say, we want a strong dollar. That's BS. They don't. They want a weaker dollar. They want, deep down, that benefits our exporters, and that would, to an extent, mitigate the trade deficit. But inevitably, that will push up, I say inevitably, all else equal, unless we become raging savers, which we will not in this country anytime soon, that will push up the cost of capital. You've got fewer foreign dollars seeking to invest in U.S. assets like treasuries.